Very good evening to all our mentorship traders. We are tonight, Saturday evening, 11th of December 2021, 8 p.m. Indian Standard Time. Last 1 week I've been traveling, so I was not in a position to keep you updated about the markets. Sorry for that. A lot of things also happened. I did spend pretty good 5 days trading from a small beach town right next to the Bay of Bengal. It's called Gopalpur in Orissa. In fact, I personally love the Orissa coastline. You should definitely go there. And I still remember when I took the Wednesday session for mentorship traders, we should do this. We should plan out something like this, wherein we can trade together like a community, right from a resort. Maybe sometime soon for sure. Today, I'm going to take a little bit of extra time and walk us through how the market fared last week and what can we expect going forward. So this is the 75-minute chart of Nifty Futures. And I remember drawing these blue horizontal lines, expecting the index to stay within this range. And the index was full of surprises, I would say. Monday's sharp more than 200 points fall, where it ended somewhere down here like this. And then a complete V recovery, sharp, short squeeze all throughout has led the index to test the this blue line on the top, which I had marked here, which is close to that 17,500, 550 levels. If I extend this volume profile all the way down till this point, then I can see that 17,450, 17,550, and down here, 17,250, 17,100. These are the kind of zones that the index will probably respect going forward. On its way up, I would also like to take a look, particularly from this particular lowest point to the current market price. I would particularly like to take a look where did the volumes play out the maximum. So as you can see, a chunk of volumes have actually happened up here, 17,450 all the way up towards 17,550. From the long perspective, from a bullish perspective, this is not a very good sign. This is not a very good sign. And any drop, any short-term slip below the 17,400 mark can quickly see the index lose another 200 points. So we will keep this in mind next week when we begin. The good thing is the index is consolidating at its short-term resistances, 17,550, 17,600. We can see that the 75-minute time frame, the moving averages have turned up and they're holding pretty well. So a move above 17,600 will mean a concrete sign, a signal that yes, this is a short-term trend reversal and it's going to hold. So we'll keep this in mind, 17,600 on the upside, 17,400 on the downside. The 75-minute time frame has turned up. It's just started to look up. But if we go one time frame higher and take a look at the daily chart, which is here, and it looks a little bit cluttered because of the visibility. So I will take them down so that it is cleaner. Yes. So the daily time frame index has just bounced back and it's right there at the 1334 exponential moving average. The trend is still down as per this daily charts. The Heiken Nashi charts have started to improve. Much green bodies, longer bodies. Now it's just slowing down a little bit, but not bad. Definitely not bad, keeping in mind the way it closed on Monday and the way it closed on Friday. If you zoom in and take a look at Thursdays and Fridays candlesticks, you will of course notice long lower shadows. Long lower shadows at the end of a short-term bounce back may not be a sign of bullishness. A break below these lows can lead to some bit of weakness. So that again coincides with the level of 17,400, 450. So from a short-term perspective, 17,400, 450, 17,600 on the upside. Above 600, of course, the index needs to definitely start to deal with its previous lows, which led to the breakdown. Remember, 650, 750, all those levels that we were talking about a month back. So those kind of levels will start to kick in. We'll see how it behaves. As of now, strategically, I would suggest that keep yourself flexible towards both the sides. Short-term long trades, short to medium-term short positions. As the daily chart is still in a downtrend, if you get any short positions, any short setups from the daily time frame, they can lead to a short-term as well as a medium-term trend. But the long trades, I would still suggest to keep it restricted in terms of time frame and be a little careful. Don't want to sound bearish, neither do I want to sound bullish, but it'll be interesting to see whether 17,400, 450 gets breached on the downside or not. Bank Nifty has done good, has done decent, but it also needs to deal with its resistances. As you can see, it has given us a bounce back. Short-term momentum has started to inch towards that overbought zone as we take a look at the 75-minute time frame. And I had drawn this big wide range. This is the retracements, the projections of this fall extended on the downside. And similar kind of story. The Bank Nifty, one good thing that I can clearly see, which I really like on this particular 75-minute chart, is this bounce back led to a trend reversal. And this was the short-term correction after the trend reversal, which actually so far so good is holding well. This low, this high, this breakout, and this support. This is a good sign. When we have erstwhile highs supporting as lows, the possibility of further upside is very, very high. The View app is dealing around 38,000, 38,100. So not bad. I think Bank Nifty has pulled the market down in the recent correction. It is trying to perform a little bit on the upside, not as much as you would have loved to, but it is at a very critical juncture. As you can see here from the daily chart of the Bank Nifty, we had these two blue bands drawn for quite some time now, and that's from where we have this bounce back, and this is the resistance that it needs to deal with. So same or similar kind of a story here with Bank Nifty also. Any kind of weakness will come only below Friday's low for the Bank Nifty, that is 36,927, 36,900. Let's take a look at the other sectors. For that, we will go to stockcharts.com. I have the RRT charts open here. I'll make the underlying as Nifty. Let's update it. First, let's take a look at 1 week perspective. From 1 week's perspective, we have the sectors all positive. Led by media, doesn't make much sense, but nevertheless, 9% gain from there. PSU banks have done good. Metals, real estate, small cap, mid cap. So pretty decent gains coming in from 3% all the way towards 9%. If you notice here, amongst the biggest gainers, you will notice that amongst the top 5, 6 gainers, most of them have their tails green, which is they are all in the leading quadrant. Only metal is the one which was in the lagging quadrant, which means that the market has given a thumbs up. Now market has looked at the leading sectors as a pocket of buying. The only leading sector which couldn't perform that well was the energy. Apart from that, it is this part which is going to play a role, this midsection where we have the Bank Nifty, the private banks, and the financials. Because when these turn up here, if they start to show that relative strength, then the chances of an extended bounce back and the chance of a new life high over a period of few months becomes higher, or else, I'm sorry, it needs time in that case. So now let's do one thing. Now let's drag this 1 week to almost 12, 13 weeks and take a look at how these tails are playing out. I will sort them in terms of their tails now. Real estate still in the leading quadrant, losing a bit of relative momentum. Now, let's come here. Let's go to the real estate bunch of stocks which I track, and let's take a look at an important one, DLF. If you take a look at DLF from a slightly larger perspective, you'll notice a beautiful trending chart and ebb and flow beautiful on the upside. Every time it gives a correction, it has bounced back to a new high. If you take a look at the daily chart, you'll notice that the moving averages have just turned down, and from its lowest point, the stock has given a very sharp bounce back. There is evidence of little bit of slowdown in terms of the momentum of this particular sector and this particular stock, which is very clear from this falling green line. It is a strong sector, but it's slowly losing momentum. What does that mean? That means for you and me as a trader, it doesn't make sense to chase these kind of stocks. Don't chase DLF when it breaks above 440, buying at a 52-week high. Don't do that thing with DLF right now. It'll be much better to buy on a dip at close to supports. Let's take a look at Godrej Properties. You see the same kind of story. They can be good swing short candidates if they fail to hold. Let's take a look at media. I don't track this, but when a sector within a span of just 12-13 weeks goes from lagging all the way up to leading, something is definitely happening. So irrespective of how much I do not like this space, it is important for us to take a look, and from a slightly larger perspective. Sun TV, Network 18, exceptional move, 49% gains coming in. Typical aim and shoot kind of a swing setup down here. So you would do good from having a position in this pack in your long-term cash portfolio rather than trading them. I would strongly suggest. So TV 18 broadcast can also be an interesting candidate, right? TV Today, if you take a look, also gave phenomenal move, just like typical kind of a buy on a dip, the aim and shoot, swing long candidates. Please, most of them are there in the cash market only, but I would not trade into them because of their noise, but looks good to have maybe a bit of weightage in the media. Rarely do you see this kind of an RRG chart where the sector just one way picks up from lagging and straight away in a matter of 12-13 weeks goes to the leading. So then we have the energy, which is doing all right. Reliance up there, losing a bit of ground. Reliance is an important stock, and we should spend a couple of minutes talking about it. Now, I have clubbed oil and gas, power, and all of them together. Makes my life a little easier to track. And Reliance, from a weekly perspective, is just hovering at its moving averages, erstwhile highs, 2270, 2280, acting as the recent support from where the stock actually managed to bounce back. See, it's nice when classical technical works like this. We've drawn this blue line months back, and though it was a freakish kind of trade, but nevertheless got tested and it gave a bounce. Now it's still in a downtrend, and it's very important to take up 2500. Continue to be bullish in these in this pocket. This pocket of stocks, auto, PSU, etc., real estate. You can. This is the pocket you should look to buy on a dip. This is the pocket you can still look to buy short-term breakouts. It is this which I am very, very interested in, the private banks, Bank Nifty, and the financials, because it has a lot of weightage and it has to move up, and only if it moves up, only if it shows strength, will we get a strong market, or else the chances are not so strong, because I don't think real estate, energy, or IT will be able to hold on to it for long. IT is weakening a little bit. IT has supported the index exceptionally well. If we take a look at, go to the NSE indices and we take a look at CNX IT, we can still see this. Remember, I was mentioning how the highs are slowly dropping, and I can actually extend this this arrow further down. These highs are getting lower, but the corrections are also getting smaller. This is a squeeze. These corrections, the size of the corrections are getting smaller. So it's actually in a make or break. If it breaks out on the upside, you have a new wave of rally, a new push of buying amongst the IT stocks. So the fact that it's not weakening and the size of the corrections are getting smaller can lead to a big breakout from IT again. Who knows? Maybe, because if you take at the weekly chart, we had a phenomenal run, and only twice has it consolidated. This is the second time, so we'll see. It's too difficult to call it right now. A breakout will mean 36,500 and above, or on the other hand, down here we have this 34,600, 500 kind of level. So IT can be important, but the ones which are still weak, pharma, metal, let's fit it out a little bit. There you go. You can see the tail of the metal. This is pharma and FMCG. These are lagging. They are giving us a bounce back. I would not buy into this bounce back right now. I would probably rather be more willing to sell into them if I get a good swing short opportunity. So few sectors pretty strong. Important sectors and pocket of the market just right there, just make or break kind of, the bank Nifty and others. And then we have pockets of weakness also, which allows us to understand that we will get opportunities on both the sides, and it's better to stay with the relative strength on the long side. And if you're willing to short, I think it makes sense to stay on with those sectors which are relatively weaker. Bank Nifty is, I think, will be the key going forward for the rest of this month. All right. So trade well, and from next week I will be active again, sharing my daily calls and views on the market. Now let's talk about your experience the last week and the stocks that you have scanned for the week ahead.